Hey guys, hope you're having an amazing day. In today's analysis, we're going to take a look at gold, US oil, and Bitcoin as usual. If you're joining us for the first time, if you like this content, please like, share, and subscribe. If you find it very helpful, join our Discord community where you can get access to like real-time updates of the market analysis and also some potential trade setups week-to-week basis. All right, guys, let's get on chat. So this is a continuation chat from our last week chat, and last week we had discussed about bits about gold, and then we had not made this move, so it was somewhere around 32.40. So today, so it's Monday already, and it's the follow from what we saw last week. Like I said, if you check our video, I'm going to share the link up above. You should remember that I said if for any reason that gold failed to drop back down after the break to 300, we are likely looking at a target of 3,500, and that is exactly what happened. So earlier last week, we saw gold made a new high at exactly 3,500 before the dump, before the correction. This was very much expected and expected this to happen. So right now, what we're seeing is just a period of consolidation. So after the dump, we saw gold enter into a pennant correction mode, or let's just call it a falling wedge in a way. So we see this currently happening, and I think most likely we're going to consolidate for a while. I'm going to break out and continue uptrend because there's still a lot of geopolitical tension, and the tariff talk is still in play. Even if it is way much lessened and not as aggressive as before, but it's still something to consider, right? And there is no clear indication of ease on the inflation or fiscal policies. So all of these factors are still going to play a great role, and not until everything is completely resolved and there's a clear sign of progress or correction in the devaluing of the US dollar, like interest rate, we'll talk about that. So all of this is going to be still going to be a big problem. So for now, I recommend we stay bullish and stay on the bullish case on gold and look for more bullish potential entry. So, excuse me, what I'm going to be looking at right now is a breakout from this pendant, and we are already approaching the apex of this correction. And a breakout should give us a potential buy setup. I'm expecting us to get a buyer entry somewhere around 33.40 or 33.50 range with a target of 3,500, because I believe strongly we're going to see price approach 3,500 again for a second time, and also most likely if we don't get a breakout below this current level of 32.40 or 32.50, then that's most likely going to be the case. Right now RSI is still on the oversold. We're still on the below 50 mark. Would tell that there's a lot of possibility for a more bullish momentum rising up, and we already saw this bullish divergence that's formed up earlier last week and on the 4 hour time frame as well. And I'm pretty sure we should see some potential growth and price movement towards the 80 RSI mark zone. So for now, guys, that's all we have for gold. We're not going to go too much into any more fundamental details, but this is mainly a setup, and this is what we're looking at for this week. All we're waiting for right now is the clear indication for the bullish continuation, and then we get our trade setup and trade entry for this week. All right, guys. So next we're going to be looking at is the oil. So similar to gold, crude oil has also been in the corrective state. Now I haven't tested the lows. We've been seeing crude oil trying to get back, try to get back to that 70 zone, but it has not been possible. All we've been seeing, I'm going to go by the daily time frame because it's much clearer. So all we're seeing here is price making that attempt, but it's almost very futile. No, nothing is happening. So I'm expecting that this week, following the next oil inventory report, I'm expecting to see a decline, a very strong drop down in crude, because all the attempts that's made to approach even 65 has been failed, it has been failed. And now I'm expecting to see something like this. So I'm going to show you guys shortly. We'll get something like this, like on the 4 hour time frame, it's much clearer. Yeah, so when we get a clear breakout, now the good thing is that this breakout is going to coincide with the April lows breakout. So when we get a price way below this current April lows, it means we're likely going to be going way much lower to work with the larger time frame, which would be the length of the descending triangle, which we have here to this point. That's exactly what we had then on gold when I said it was going to hit 500, and it did. So I'm expecting that in the near couple of months, we should see US oil price start trending towards 45. That's like what I think is going to settle for this many half of the year. But for now, we'll just pay close attention, watch what's going to happen in the market, the small movement, and capture all of those movements. So for now, we are not seeing anything significant movements. Price has just been consolidating very close and very tight, and it's hard to even say it's going to keep going down or going up. But on the larger time frame, we can see clearly that in the long term, it's a bearish trend for the crude. So now we're just waiting for price to break below this. I'm going to be looking at entries either if price test what's it called 66 dollars, or we get a breakout below $62. That would be $261. Then we can consider a sell entry and looking at the target of $55 again. So I'm going to show you a quick setup on how that's likely going to work. So that a close below this level and set our stop loss somewhere around here, and I'll take target profit somewhere around let's say 50 towards 55 for a start, and then main target should be around 51. So we'll see that happen pretty soon, and for now, fingers crossed, and we'll pay close attention to the market and see how it plays out. But key factor is if we get the breakout here, or we can take a risky setup somewhat around 65, because clearly we're not gonna see, we're gonna be very hard to see price around $70 again. So that's a setup for now, and that's what we're gonna be watching out for this week. And lastly, it's BTC. So BTC, you know, in our past analysis, we've always been like BTC has been depressed, BTC has been sad, no movement. But right now, we are seeing the return of the bull, right? We're seeing the return of the bull, and that means that we're likely going to be seeing more bullish candle close on a month-to-month basis, right? So we have April, May, June, July, August, September, and it's stretched down to October. You know, we have 7 months that we are expecting to see the end of this bull rally. So now we're already seeing price broke out from this long-term descending consolidation, long-term consolidation, and we're seeing price currently above the 50% Fibonacci level. That tells a clear indication that we are currently back on the bull. The bull run is already back again. So I'm expecting that from this is April, March, April, May. So we should get a full bullish kind of close. And those I'm gonna go to morning candles so we can get clearly expectations. Yeah, so we should be expecting month-to-month candle close and all bullish, and I believe we should see price really trend as high as 200k per BTC within this next 7 months. So it's a big one. It's something we should be joyful about. I mean, it took some long time to get over here. Market has been very, very slow and depressing for a long period of time, and now we're seeing the bull return back again. So guys, stay open. If you're already in this trade, then the target should be somewhere around 120k. That's the next target I'm expecting for BTC, and I believe we should get that after we break out. Now the good thing is this: the previous all-time high was somewhere around 109k, 110k on the stretch. Now, if for any reason price get back to that level, we're going to break through that level, perhaps consolidate for a while. I'm going to get the quick brush tool and show something that could likely happen. We get something like this, we'll consolidate for a little bit, and then we'll go straight up, because the resistance at the 38.2% Fibonacci level is very close to the resistance we had at 110k, which is our previous all-time high, and that was the last test we had. So most likely we're going to break through this level and start looking towards 150k price, which is going to shake the market very much. So guys, that's about this week analysis. If you're taking any trades, be smart, be careful, and be wise as always. Take your maximum risk management, and also trade smart, not hard. And lastly, if you're not on our Discord platform, I recommend you join our Discord platform. Here's just a brief overview of the weekly analysis. You're gonna get more details and more, in real life and real time feedbacks. All right, guys, take care and have a great trading week.